Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 9th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here the ES has pulled back over the last 4 sessions. We've had the 4-day range pullback that we've quantified here before that tells us that we should be able to see more expansion here to the downside on a 4-range basis compared to the average we've seen lately. It's got about 150 points or so. When we tend to pull back on a 4-day range basis, we tend to get at least about 150 points or so right in that zone. And right now we're way less than that. On a 4-day range basis right here, we're just at 64 points. So it's been a very shallow affair here. This reminds me of one of those early month pullbacks that's pretty shallow. It goes higher, maybe a deeper pullback later in the month. Shallow pullback early in the month, deeper pullback later, shallow, deeper. So perhaps this is a shallow pullback that can lead to a bounce right away, and then a deeper pullback come out that later on in the month. We'll see. At the moment, the first test into a higher value relationship for the pivot range right here has been defended. The PIMA trigger zone is currently being defended, although this moving average right there needs to be changed to 21. There it is. So right now, holding inside the PIMA trigger zone, pulling back into the pivot range, that all suggests strength ahead for the ES unless it continues to fail to hold, say, 44.90, 44.85, today's low. That could open up another wave of weakness up ahead. But holding that zone right now suggests more strength. The ES has just pushed back above the previous week's low price of 4,500. So holding that zone on any pullback could lead to a bounce back toward 45.25 up above. Keep an eye on weekly VWAP. All right, let's take a look here at the NQ. The NQ continues to develop that narrow range here, which has developed over the last 6 days, now 7. So if we bring it on a 7 developing day basis here, you'll see this range right there corresponds to that right there, which is 34.5% of average, only 191 points over that 7-day range period, and it's been averaging about 500 points on a 7-day range period average. So again, very compressed, very quiet, not much in the way of expansion just yet. If we were to see some expansion again, any downside break should be met with the opportunity to buy the dip and then push this thing higher to new highs until proven otherwise. And where this thing proves otherwise here is 15.2. A failure to hold that level would open up much more weakness ahead. But we could pull back as deep as that zone and still be a buying opportunity right now. So still developing inside the narrow 7-day range. Eventually, perhaps a shakeout, a failed breakout could lead to a nice breakout ahead. So we'll continue to watch this range. If we take a look here at crude oil, you'll see right here with crude oil, it continues to honor that upper trend line here that we've talked about. If I can get it lined up here, right there you can see this upper line from that line right there across these highs. That's basically your channel that we've been following, and this channel right here has been very good about leading to rejections in the recent quarter. Ever since this thing topped out here around the 4th of July holiday, it's been downtrending ever since, downward sloping channel, and the key level here has been 70 to 70.27. That 70 level, you can see the LVN right here. It gave it up here, retest, all failing to establish acceptance back above 70. Now you have this narrow range that is formed at these highs. That could be kind of a late bulls getting trapped, followed by what could be a rotation back down. We may see this leg up ahead, and that could take us at least into 60 to 62, but even as deep as 58s being the previous quarter's low price. So right now, watching the zone. Until then, we're still kind of stuck inside a developing compression here. If we look at this, let's count them out: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So you can just kind of do a 10 or 12-day range, however it suits. Let's go a full 12 days right there, and that 12-day range, 62% of average, and a 10-point potential move forecasted out of that range. A 10-point potential move. So again, if we're at 68, 75 right now, and we were to break to the downside, 58.75 could be the target based off of this calculation. So we'll see how it develops here as we proceed forward. If we take a look lastly now at gold futures. Gold futures has also seen quite a bit of selling pressure ever since the August 2020 highs. Every major rally has been offered and significant rejections been seen along the way. Recently, we've seen a really good rally back up. 1840 though continues to be a major overhead resistance level. It just can't get back above that zone, and we're still kind of stuck inside this range here. So for the most part, that 1760 still very important. 1840 up here still very important, and we could be looking at further trading range activity in that zone here until proven otherwise. If we kind of drill down to the very current little chart here, again, after the recent fade back down from 1840, mentioned before, we could still see a return back to this zone. The 1760s, the LVN. You got the previous quarter's close above that at 1770. So again, we're flowing down toward that zone here up ahead. And just recently, we've seen a pretty harsh rejection here at the previous week's low price here in gold, 1803.40, and that could lead to another round of weakness here ahead if price cannot get back above that zone. So 1805's basically the level to break back above for gold bulls. Failure to get above that zone opens up a bit more downside into 1760. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.